Hey guys, it's that Dividend guy coming at you with another stock news update. So I wanted to take a look at AT&T stock because there has been some pretty big news. So AT&T has decided to sell Warner Media and create a spin-off company which will merge with Discovery. And I wanted to show exactly how the markets reacted to this news. So take a look at this. So it was valued at around $31 a share. And the original news hit early in the morning on May 17th, and it peaked at like 33.71. So that's like a new high for the stock, around like 33.88. So it actually hit a new high. And so the press release when it came out said that AT&T spinning off Warner, which AT&T acquired a lot of debt in order to get Warner to acquire the company, and a lot of people weren't really excited about it because they didn't feel like they were getting a good deal as AT&T shareholders. Now, I disagree. I like Warner Media. I like their catalog and their IP, and I was a fan of the deal because I like the DCEU for the animated offerings. But people were mad about the Warner deal because this is just like the AOL deal that kind of fell through, the DirecTV deal. They bought a cable service and network when Netflix was starting to boom, so it didn't make sense. Like the people were already cord cutting when they bought DirecTV, and honestly, Warner was the best acquisition that they've made. But they didn't make it in a healthy way. So they bought the company. The CEO decided to buy the company using debt, and then it just destroyed the balance sheet. So I totally understand why investors didn't like the deal. But so there was news early on the the deal. So AT&T is going to be a pure telecom play now, which I'm actually a fan of. And AT&T shareholders are going to get a 71% stake in the new company, and Discovery shareholders will get a 29% stake. So we're getting paid $43 billion to give away Warner Media and give this streaming service a lot more oomph. So technically, we're not losing anything. We're just giving. We're selling the Warner Media off, and we're cutting our business by like a third. But the news that really made this tank was the fact that AT&T did say that they are cutting the dividend. So I've seen a couple projections. Of course, we don't have the exact numbers yet, but from what I've calculated, plus the Dividend diplomats did it, Dividend Data's done it as well. The estimated dividend is about a 50% cut. And so right now we're paying about 60% of it's a 60% payout ratio for the dividend. They're cutting it back even more to about 40 to 43%. If it hits 40%, it's going to be a 26-cent dividend around that mark. And if it goes to 43%, it's going to be about a 28 to 29-cent dividend. So we are looking at a pretty significant dividend cut. We're going from 208 a year for an annual payment to 111, I think is what the article said. So cutting it by more than half. But I think that's actually a good thing. But the market reacted very poorly. So I wanted to make a video and kind of just show exactly how volatile this has become, because it depends on what you want to do. A lot of people, though, were depending on AT&T to be that dividend stock. A lot of retirees owned this stock and were very dependent on that dividend. So I'm not surprised to see, look at this huge drop here, guys. 33.64 on the news that they were spinning off Warner, which was the good news. That's where the dividend cut happened, right there. Look at that. 33. It dropped almost $3 in a single day. And so it's been a while since AT&T was this low, but definitely reacting to the news. So a lot of people are selling off, and I don't blame them. Honestly, I thought about selling myself. This is a pretty big position. Like you guys can see, 171 shares, about 15% of the portfolio now. But 50% is a lot to cut of the dividend, but it makes sense because we've lost free cash flow from the DirecTV deal, as well as now we're losing about a third of the value that we have in the company for the HBO Max / Warner acquisition. That was estimated $15 per share loss of free cash flow. So it said that it added $15 to the stock price, which I don't get, because uh, one of the reasons I bought AT&T honestly was because of the Warner deal. I liked it. I looked at Warner and I had the estimation to be around $47 for fair value, and it was at 43. AT&T, I had it about 31.50, I think it was at the time. And then once the deal happened, I pretty much got Warner for free. So like that's kind of the thing with this deal, is that, and I totally agree with what management is saying. They're pointing out that since the deal, they haven't really unlocked any earnings. Like, yeah, they're getting free cash flow from that, but that hasn't been projected in the stock price. So they're saying that there's been $15 of value cut from the stock, which I agree, but it hasn't been reflected in the stock price. So technically, we're not really losing anything when it comes to the price of the stock, because the acquisition was, the market didn't actually reflect the acquisition properly. It didn't see it as a value being added to AT&T. It saw it as debt being added, which I agree. There's a difference there. But what they are excited about is AT&T is not technically losing the assets of Warner. It's gaining the assets of Discovery. It's not going to be direct under like a subsidiary of AT&T. It's a completely separate company. So from what I understand thus far for AT&T shareholders is we're going to be getting this new streaming service, and it's going to encompass Discovery as well, which they also have their own streaming platform. But the reason that I wanted to cover this was because look at this massive sell-off. The market's pissed, which I get it, because honestly, guys, if you take a look at the earnings call, I believe they said it on the earnings call. I watched the dividend I listened to the earnings call, so I know they said that on the earnings call, that the dividend was safe. Even the dividend diplomats, when the earnings call happened, were expecting a dividend increase. And so I think it was a couple months ago, they did an earnings call and they said that the dividend was safe. So all of these people that are holding this stock are thinking, okay, we're good. Like, it's been kind of shaky. They're paying down debt. They're, doing a bunch of investing into the 5G infrastructure. Makes sense, but they're keeping our dividend. And they reassured shareholders that the dividend wasn't going anywhere. And then here we are, like 2 months later, two and a half months later, and they've decided to spin off the Warner assets and slash the dividend by half. I don't blame the market for reacting this way. It makes sense. I mean, if you strictly were in this company, not for the company, but for the 7% yield, get out. That makes sense. A lot of people are panic selling because of the fact that the dividend's gone. I mean, they're going to be paying it until mid 2022. So, for everybody who is selling, I honestly, you might want to check that and make sure that you don't sell until after the cut, because you're kind of losing out on that value that you still have, and you're gonna have to pay taxes on that. But again, it's your decision. But even if I do sell shares, I'm not gonna sell them until I see what this new company is going to be earning me. Because if the market didn't reflect that value in the stock, it's definitely going to reflect the value as an independent company away from AT&T. So I just wanted to show the big market sell-off and kind of explain why. It's pretty apparent investors are pissed. They want that dividend. They want that 7% yield, and AT&T's taking that away from them. Now, I do not blame management. This makes sense. If you lose one of your... Honestly, 5G is going to be a big growth prospect, of course. But Warner was looking like it was going to be a growth engine like Disney has with Disney Plus. So they were putting a lot of faith into HBO Max to be a dividend, to grow the dividend and, have constant revenue with that subscription model. So when they got that taken away, of course they're going to cut the dividend. Plus they lost, like I said earlier, the cash flow from DirecTV, so this makes sense. But if you're in this stock for the 7% yield, you're going to be pissed because the company was set up in a certain way that it had cash flows enough to cover it. It was going to pay down the debt. And less than 2 months ago, they told shareholders in the meeting, in the earnings report and stuff, that they weren't cutting the dividend. So I don't blame investors. If you're not in the company because you believe in the company, which at this point I don't blame anyone. I mean, like we've talked about, the AOL acquisition was trash. The DirecTV one was definitely outdated. The Warner one's the only one that made sense, but if they didn't do the first two acquisitions, they would have been okay. It seemed like the CEO just didn't know what he was doing and wanted to randomly buy companies and turn AT&T into something that it wasn't. AT&T was meant to be a pure telecom play. So this is more healthy. This is a more healthy AT&T, and I think it will be a much more robust company. And as for the dividend being scaled back, I do think that they did it a little too aggressively. They could have done a 50% payout ratio and kept investors a little bit happier. Instead of like a 26 to 28-cent dividend, they could have kept it up to like a 35-cent dividend, which that would have been worse, but not as bad. Wouldn't been as bad, but it still would suck. It'd still be a cut. But that 50% slash is huge. So let me know what you guys are planning on doing with your AT&T shares. I don't blame anybody for selling. I'm gonna make a video tomorrow talking about what I'm planning on doing with my shares, so I don't want to say here. But for anybody who's selling, I totally understand it. I thought about selling myself. I know a couple other AT&T shareholders that are holding just to see what this new streaming service is going to be. But I mean, if you look at the comments on some of the news report videos, like CNN, CNBC, that did this, like on the newscast, talked about the merger. If you look at the Dividend Diplomats video, I know Dividend Data just did a video. A lot of people are selling out of AT&T, and I cannot blame them. I mean, management has failed. The CEO and management has failed us multiple times. So if you're holding because you have faith that they are going to be stronger as a pure telecom play, and once they get that $43 million, you're trusting that they are either going to use it to fund the 5G infrastructure, or they're going to pay down that debt, which I hope they pay down the debt. I think that will be better for the company. But anyways, with all that being said, guys, let me know what you plan on doing with your AT&T shares. Remember to hit the subscribe button on my channel, That Dividend Guy, and when you do, hit the bell notification so you don't miss any updates. I know I've been doing a lot of AT&T videos just because of the news, but I will have the list videos coming out still. I have 5 of them already planned, and daily portfolio updates as you guys expect. So thank you guys so much for watching. Remember to hit the subscribe button. Remember, the goal is 700 subscribers before the end of the year and 40K for the portfolio. I plan on hitting both of those goals. So if you guys want to see that happen, join the family, and I'll see you guys tomorrow with one more AT&T update, just sharing what I'm doing. So thank you guys for watching, and I'll see you guys tomorrow.